Hi there, traders, and welcome to Trade the Structure and the first part in a series I've entitled Pro Price Action Trading Tips. Just had to read that off the screen there. So it's a series I'm going to put together with a few tips and tricks that I look at when I'm trading, especially intraday on the smaller time frames when you're trying to scalp out the market, and just things that I'm constantly looking for. Okay, so I'm not sure exactly how many parts there's going to be in this series. But for starters, we're probably going to have 5 or 6 to start off with. And if there's anything I think of down the track, we'll just keep adding to that. But you'll find it on my YouTube channel anyway. So we'll get stuck into it now. So we've got a chart of the US Tech 100, you'll see on the screen there. Um, and what I want to talk about the first time around is the opening flush and the opening drive. Okay, so it's something that you can see in most indices. So when you've got the underlying index open, say for example, I trade during the day on the Hang Seng. Okay, so the Hang Seng CFDs and futures, well, basically the futures market, which the CFD follows, opens up at I think it's 11:15 Sydney time, and the underlying index opens at 11:30. Okay, so it's at 11:30 that I'm just trying to look to see if we got a bit of a drive or if the market's going to start to take off. It's more prominent on the US Tech, which we'll show you here, and the Dow. Okay, so you get that first hour of trading when the futures market opens, an hour before basically the underlying index opens, and then they will more than likely flush a level and then drive the opposite direction. So they're doing it for a few different reasons. So this is, we'll go for a couple of examples, but this is the first one you could see. This was, I think, from last night actually. So you can see how to mine a level through here. Okay, that was about 12,808. All right, so that was the pre-market, basically the first hour before trading. You can see it opens at 10:30, and then the market's made a low, and then basically drove up off that low, and then just when it opened at 11:30, it's flushed through that level. Okay, flushed through that level. That does one or two things. What it can do is clean out some longs, some buyers, put them back on the sidelines, but it also traps some sellers. Okay, so anyone that's going to sell the break of that low, expecting the market to drive down, has just sold it on the, with a stop loss level, and they've got their protective, well, if they have, they got their protective stop above. So what the market does is activate their sell stops, push the market down, and then drive straight back up again. So all those traders have to start buying back into the market. So if you actually don't have a stop, for example, you've just sold it there on the break, and then sooner or later, when you realize you got it wrong, you're going to have to buy back. So that gives the market a bit of fuel to drive back up in the opposite direction. And it can happen more often than not. You'll see it time and time again when the market's opening, and then what it does is just drive higher, and that's the algorithm starting to trip over each other, running the market higher, your traders trying to get out, and your traders who just got flushed, that boarded up in this little ramp up, have just got flushed out, squeezed out, are trying to get back in, okay? So you can see that the market's flushed the level and started to drive higher, and that should be, once you see that flush, I would generally be looking the opposite direction for a setup, on the lower time frames. This is the 5-minute chart. I would generally be looking at the 1-minute chart for a setup. So if we go along, we just go along to different opens. Now, here is another open. There's another one there from the previous session. You can see the market was sort of just drifting lower, had a bit of a pop-up into the open. So then that first hour drove through that level there and bounced straight back again. Okay, so what it's done, exactly the same thing, squeezed out, or not really here, squeezed out some buyers, but it's actually just trapped some more sellers. They've jumped in on the break and then turned around and squeezed them all back out. So it's this fuel, any of these sellers through here, that the market's going to turn around and start to squeeze back out of the action. That's where you get that opening drive. Okay, it's not always up, but lately it has been up. Right, you can see that drive, it lasted for quite a few minutes here. We've got 5, 10, 15, 20, about 45 minutes or so. It just kept driving high, and that's where you can go down to your lower time frame charts and just start to, scalp out some longs. Okay, knowing that there's going to be some trap traders in there, people getting squeezed out of the action, just put back on the sidelines. So if we keep going along, you'll see a few more. This is a bit different. This one here, still it flushed down and then turned around and ramped straight back up again. Here was just sort of dragging in some more sellers. The market's been pressing down into the open, pressed down, flushed down, and turn around and ramp straight back up. So it's just gone in the opposite direction. So not saying that it always goes the opposite direction, but it's something that you definitely want to keep an eye out for, especially on the open. The DAX can do it as well. So the DAX has an hour open before, I think at the moment it's 4 p.m. Sydney time, the futures market opens, and then 5 p.m. Sydney time, and it's the same with the FTSE, where the index opens. So that's where all your shares are trading. The index starts to pick a direction where the big funds are getting in or getting out or whatever they're doing. But they're driving the market around. So what the indices and the futures traders do, and the algos will drive the market down and then turn around and reverse them. Not all the time, like I said, but it's happening quite a lot. And it's something that you definitely want to keep an eye out for. Okay, not only to keep out of trouble, but it provides opportunity. All right, let's go across and just keep going through. This one's not so good here, but it did flush, some opening level. Tried to get down to the, well, that's actually not the opening low, but flushed the that range from the open, and then turned around and drove higher. It wasn't really a big move in consideration of what we looked at prior. Okay, got a few more here, sort of popped down. You can see sort of flushed down and drove straight back in the opposite direction. Look, there's probably a few more here. I think here was one on the downside actually. At 11:35, you can see the market sort of popped up, really mildly popped up, and then kept driving down. So if you're going to look at something like this, for instance, you've got the market, is heading down into the open. It sort of pops up, drives down. You may or may not have a setup short there, but then you've definitely got a setup later on. Okay, a shoulder, we call it a shoulder anyway, when the market's starting to get and produce a lower high and driving down a bit further. Okay, so you can see that it does happen quite regularly, and it's really something you want to take a notice of. Here's another one at 11:30. Market sort of flushed down, drove up, and then obviously turned around and went the opposite way. But you can see that it did, that opening candle there at 11:30 did drive down, and it turned around and ramped straight back up in the opposite direction. Okay, so trapping traders ramping up, whether it's trapping traders on the upside or downside, and just reversing. Now, sometimes that opening drive doesn't do too much. Like you can see here, it pushed down, ramped up, but really didn't drive too far at all, then turn around and head south anyway. But at least you know that you can get something out. If you're looking to scalp something, you can scalp it out on the upside there. That gives you more than enough fat. Now, if you do see some of the other examples we just mentioned, if you get on the right side and it does start to really push and really start to ramp up on that opening drive, then you can get, without much risk on that trade, you can get quite a few points banked in. Okay, so that's pretty much it. That's what I'm talking about there. That's that opening flush and then generally driving the opposite direction. The idea behind it is just to trap some traders, okay, and squeeze out some traders that potentially have gone long or gone short. Okay, so that's what it does, and you'll see it time and time again. So just next time around when you're trading the open, just be wary of that. You don't look to go straight off the bat going short when it breaks the level, because more than likely it's going to turn around. You're going to be the one trapped, and it's going to turn around and ramp straight back up in the opposite direction. Right, that's all I want to talk about, guys. That's the first part underway, so we're off to a good start. We'll see how we go. They're going to be short, sweet videos. It'd be much appreciated if you do, if you like what you hear and you want to see more, subscribe to the channel and leave us a like. Okay, give us a thumbs up, and then we'll go from there and have a look around the YouTube channel. All right, guys, thank you. We'll see you in part 2.